Good morning. Welcome back to the War Room. I am Malik. Today is Thursday, April 9th. Yesterday, the financial world celebrated what they thought was a macroeconomic miracle. The KSE-100 surged a historic 14,137 points on the back of the Islamabad Accord, a two-week U.S.-Iran ceasefire brokered by Pakistan. The entire thesis of that 14,000-point God candle was that the Strait of Hormuz was reopening, global crude would collapse, and the 520 rupee domestic diesel nightmare was over. I am turning on the mic this morning to tell you that the ceasefire is already dead. While the PSX was closed overnight, the geopolitical reality violently unraveled. Israel launched massive, devastating strikes into Lebanon, killing over 250 people. Prime Minister Netanyahu declared that the ceasefire does not cover Hezbollah, directly contradicting the terms negotiated in Islamabad. The Iranian response was instantaneous. Parliament Speaker Galabafov declared the ceasefire unreasonable due to U.S. and Israeli violations, and Tehran officially suspended all tanker traffic. The Strait of Hormuz is closed again. Today, we dissect the anatomy of the most catastrophic bull trap in the history of the Pakistan Stock Exchange. I will show you why the 1.24 billion shares bought yesterday are now trapped in a burning building, and why the boardrooms are scrambling to survive a whiplash that no algorithmic model could have predicted. Let us analyze the pure tape mechanics of Wednesday's 14,137-point moonshot. Yesterday, the main board traded an absolute staggering 1.24 billion shares. Out of 491 companies, 448 advanced. Institutional and foreign capital poured into the cyclical kill zone, cement, textiles, and autos, pricing in the survival of their logistics chains. They assumed the 520 rupee diesel barrel was dead. They were wrong. They bought the rumor of peace, and now they are waking up to the reality of war. The Strait of Hormuz is mined and closed. Global Brent crude is going to violently reverse its drop from yesterday. The Pakistani government cannot roll back the fuel hike. The institutions that injected 1.2 billion shares into the tape yesterday are now holding depreciating assets in a closed energy grid. When the opening bell rings today at 9:30 a.m., those institutions are going to execute a massive, panicked unwinding of those positions to get their capital back out. We are sitting at 165,811, but that floor is made of glass. The corporate boardrooms went to sleep thinking they had a 14-day window to breathe. They woke up choking. Today, Thursday, April 9th, the PSX calendar is flashing two critical pulses that will act as reality checks for the entire exchange. Mark your screens. 11 a.m., Perwaz Financial Services, PSFS LTFC, dropping annual accounts for its debt securities. With 1.24 billion shares of liquidity potentially trying to exit the market today, the microfinance and debt sector will show us if the credit grid can handle the volatility of a failed ceasefire. 11:30 a.m., Al Noor Sugar Mills Limited, holding an emergency mystery meeting in Karachi. Yesterday afternoon, this agricultural heavyweight likely thought they were meeting to discuss expansion plans based on cheap post-ceasefire freight costs. Today, that agenda is in the trash. They are meeting at 11:30 a.m. because they are right back in the 520 rupee diesel kill zone, entirely dependent on a crippled transport network. Watch the agricultural tape closely. It will dictate the sentiment for the entire manufacturing board. Here is your battle plan for Thursday. 1. The God Candle Reversal. The 14,137-point rally was built on a geopolitical illusion. Do not trust the 165K support line. When the market realizes the Strait of Hormuz is closed, the algorithmic selling will be violent. 2. The liquidity exit. The 1.2 billion shares bought yesterday are going to look for the exit tour today. Do not be their exit liquidity. Do not buy the morning dip. 3. Total cash supremacy. The whiplash from peace to war in under 12 hours is enough to break any portfolio manager. We survive because we adapt to the data, not the emotion. The war continues. The diesel shock remains. Keep your armor on and command the Thursday. Disclaimer: Stock Sense is an educational platform. I am an analyst, not a financial advisor. The market is facing unprecedented geopolitical volatility. Trade at your own risk.